90% of retail traders fail in the market, and the reason for that is because they don't know how the banks trade. So in this episode, I'm going to be showing you how the banks trade by using a very simple strategy which is called institutional order blocks. So knowing how institutional order blocks work, it's going to set you apart from the other retail traders that trade how retail traders trade instead of knowing how the banks trade. So guys, I'm going to be showing you zones at which institutions and banks place their orders so that they can drive the markets either up or down, guys. And guys, watch the video from the start to the end, because at the end of the video I have something bonus for you guys and I don't want you to miss it. So make sure to subscribe if you're new around here, like, share, and let's get started with this video. So guys, we need to first understand what an order block is. An order block is a technical indicator that draws zones based on the trading activity of the big banks and institutional traders. So by institutional traders, they mean the brokers, the big finance companies and all that. So an order block is widely used by traders who trade using the order flow trading method. The hidden footprints of institutional traders are revealed using this indicator called the order block. So the big market players choose the levels with high probability trade reversals. So if we become able to find order blocks on our chart, we can find high probability levels, and those levels we can use them for trading. So guys, I'm going to be showing you all that in today's video, guys. So guys, we are looking at the Euro GBP. So this is our chart. So the reason why I'm looking at the Euro GBP, the Euro is a very strong currency and the GBP is also a strong currency. So when you mix up all those, it's a very volatile currency pair. So and we are trading on the daily time frame. So if you're trading institutional order blocks, you only trade them on the big time frames, because that's where the big institutions trade, that's where the institutional traders trade, and that's where the big banks trade. That's where you're going to see the activity for the big guys that trade in the market. The big guys, they can't put their money, they can't play around with their money in the small time frames like retail traders do. That's why retail traders lose much of their money, because they tend to play around in the 1 hour, small time frames. Yet the big banks trade in big time frames. So this is the daily time frames, guys. So the first thing we are going to do, we are going to add an indicator called order block. Remember, this is an indicator. You can try it. You can use your eyes to look out for these, to look out for the order blocks. But again, there is already an indicator. So this is the indicator right here. So guys, this is the indicator. It's called order blocks with signals. So when I add it, this is how it will look like. But again, I'll just zoom out like this. So guys, now this indicator, what it does, it's going to show us zones at which the banks, at which the institutional traders are putting in orders. So I'm going to go this side. I'm going to swipe to this left side of my computer so you can see very well. So you see all these zones that are marked out, this is where the institutions and banks have their orders placed in, so that when price comes back to this level, they're definitely putting in trades. So we have bullish order blocks and also we have bearish order blocks. Right now we're going to look at only bullish order blocks. So as you can see, I've drawn out the zone. So right now the zone that I traded last week and this week is the one I'm going to show you. So this was the zone right here, guys. So when you add this indicator, it will show you the zone. So this was the zone right here. So it has to mark out a candle. So let's zoom in very well and then be able to see that candle. Which candle was that was marked out as our order block? Let's zoom out and see which candle was that. Let's see. So guys, do you see this candle? Guys, do you see this candle right here? This candle right here. Let me mark it out for you so that you can see it. This candle right here, this one. So this is the order block, guys. That is our order block. So this indicator, it will help you. This indicator called order blocks with signals, it will help you do the work for you to identify for you the signal. Okay, and it will tell you this is the zone now where banks are going to put in liquidity. So when you add the indicator and then you it will mark for you the zone. So it marked for me this zone, as you can see, and the zone came up to this side. So when you swipe to your right hand, you can see the zone went up to this side. You see, it went up to this side until when price came back to this same zone and price bounced off and went back down. So this is what I'm going to teach you today. This is what I'm going to teach you today. So as you can see, this indicator, what it did, it identified for me a candle right here. So for me, all I wanted now is price to come back to this same zone. Then I take a massive sell trade. Again, I took a massive sell trade, you know, just off having that order block there. So guys, when you know how order blocks work or how to identify them using this indicator, like, it helps you trade. This can be part of your trading system, you know. You can be someone who doesn't trade every time, so you just wait for a perfect setup to come, you know. You don't need to be in the market every time. You can monitor it every time, but you don't need to trade every time. So as you can see, my order block was here, then price came back to the same level. So as you can see, price came back to the same level. And these wicks here, these long wicks, those are they be taking out people's stop losses when you see long wicks like that. But again, we saw rejection. There was rejection. Even you see the candles closed just below. The candles closed just below our let me mark this out so that you can see it. So you can see price, as you can see, price closed below, these candles closed below our block order zone. So this is the zone. So again, this zone is at which, you know, banks and big institutions were like, okay, we are going to place in our orders, so that when price comes back to that zone, as you can see. So for them, what they do, they look out for a zone, a potential zone where they know, okay, price is going to do this when it reaches this zone. So you see, they looked out for this and they are like, okay, when price comes back here, so remember, they waited for quite a long time, you know. They waited for a long time, you know. So this is why I tell you guys, you don't need to trade every time. You don't need to trade every time. These banks can manipulate markets. As you can see this is the 20th. Look down here. Where is there's a block here down here. So this was the 20th, 21st of April last year. Then look at when the price came back here, June 14th. This is the time when prices come back to this same zone, you know, because they know, you know. So they marked out their zone, they marked out this zone here, and they knew, okay, let's mark out that zone so that when price comes back here, we are going to add in, we are going to drive it back down. And the reason why they do that, they can't fill in everything at that time. You get. So order blocks represent the orders of institutions and big banks, as market orders cannot be filled at once, so they can't fill in at once there. That's why they just leave an order, or they leave an order block there, so that when the market comes back there, they will take trades again. So this is where the activity is. You can even see here, this is another activity. The activity is here. The big guys are, you know, playing around here. They have their orders here. So by orders, we mean the same way you would place your sell stops and all that, you know, your buy limits and all that. The same way these banks can also place their trades, and then, I mean, they can place their orders, and, you know, they know, okay, this is where they will place their orders. As you can see, even when price, this market, when it reaches time to come back up here, it has to definitely play around between these zones, all these marked out zones, you see. So guys, so this is the trade I took. Let me jump onto the trade I took. The trade I took a sell trade. I didn't really go in up here. Because I was placing, I had some other trades running, and when I'm having other trades running, I don't like to, you know, place more trades. So guys, before we go for any further, make sure to subscribe, like, and share with all your friends. So let's go on. So the reason why I didn't take this trade is because I was holding more trades, and you know, when you're holding trades, you know, you don't need to place more trades, because that sometimes can be greed, or sometimes I don't want to overpopulate my account, you know. Yeah. So what I did, I waited for price to, I drew out this pattern. As you can see, this pattern up here. Then, you know, I had my area 12 accounting waves 1 to 3 up to 5 until when price broke out here. So Then I waited for the retest and took the trade just here. So when you go into the smaller time frame, remember this is the daily time frame. So when you go into the smaller time frame, you see the retest here. So we took a sold trade, a massive sold trade. As you check just here, I'm going to put a picture up here so that you can see my trades I took for the Euro GBP sold trade just here on your left hand side. Yeah, that is my trade I took. You see, I took very massive nice trades. So I took, and my target was to at least get 150 pips, you know, 150 pips. And guess what? Market came back down up to this zone here. You see this zone where there's a B here. Where there is a B here, yeah. Where there's a B here. This is where my take profit was. And you guess what? Price reached there, you see? Price reached this level, guys, you see? And then guess why? Guess why I placed my take profit there? The reason why I put my take profit there, again, we have another order block. Now this time around, this is a bullish, no, this is a bearish order block. Remember the other one was a bullish order block. This one I just showed you. This one was it was a bullish order block. Let's see. So this one was a bullish order block, as you can see. Let me pick this one. So see that this one I've marked out. This was a bullish order block. So when let me come back to this side. So as you can see, this is, so when I sold, this was last week, but we made profits again. I knew this, okay, this is now another strong zone. Prices are not going to push even lower, so I knew, okay, price is going to bounce off, you know. It was even off the US inflation data that was released, I think that was Wednesday, just this week. So we had prices, you know, going back up because, you know, the inflation came out very, very high. It was, I think, 9 point something, yeah. So this is now I took another trade, but I didn't just take another trade because I knew this was also another order block. So the order block we have here is this candle here. You see this candle is marked out. So this was the last candle before price changed. So this was the last candle before price changed to start going back up. So this was our last candle. But again, as I told you guys, this indicator called order block with signals, it identifies for you the order blocks. You don't need to really struggle with knowing how the order blocks look. This one, it will always identify for you these order blocks. As you can see, this is where order block was, and then you see that's where I had my target, and again this is where I had my entry to go back to the upper side. So guys, so this is how you take trades. So let me choose this tool here and show you how you take trades. So the first trade here, it would be, your entry would be right just down here. If you are to take these trades, we don't want to, you know, so if you were to take these trades, if you're taking trades with the order box, what you do when you put your entry here, as you can see, if your entry has to be right here. You see that part I'm marking out. Then your stop loss has to be very tight, guys. It has to be very tight. But again, you can decide to a stop loss based off your order block. So meaning you would just come this side and look here so that you can know to put your stop loss and entry and all that. So this is what we have here. So meaning I would put my stop loss here. So let me choose my horizontal lines. So meaning my stop loss would be here. So this is my stop loss. So this is red, and then my target, my entry would be just at this line here. So I'll mark this one green. I'll mark this green and I'll make it very big. I'll make it very big like that. Then my target would be so I'll come this side to show you my target. So my target would be, you know, again, if you see this, if you see this indicator choosing for you another, it shows you a level where price is going to now bounce off again, then you put your take profit there. So meaning my take profit for me was here. You see, that was my take profit. So as you can see, the red line, this red line is our stop loss. This was our stop loss, as you can see, the red line here, this one. Then our entry is this one, and then our target is this one. But again, for me, I took the trade just off here because I was late for up here. But again, I had my trend line, so I waited for the trend line break, and then took my trade even off a good area 12 analysis, guys, as you can see. So this was my trade for when I was selling. Then let me show you my trade when I was when I was buying the Euro GBP. Again, I'm going to show you. Look at the the left side of the screen. As you can see, those are my trades. Yeah, I also took the buy trades, and even I sent the same signals both in the free group and the VIP group. So everyone really had a good day with everyone ate. All I can say, everyone ate. So this was our trade, guys. As you can see, same way my stop loss would be very tight. My stop loss would be here. That's the red line for my stop loss. Then I would have my entry. I would have my entry just here. This would be my entry just right here. This would be my entry, and then my target is definitely up here. My target is definitely up here. So I'll make this green color since this is my target. So my entry is this one, and I'll make my entry a blue color. So as you can see, this is how we would take this trade. But again, we are still holding these trades. Our take profit 1 was hit and take profit was hit, so we are still holding take profit 3. But again, our target is the first 100 pips. When we hit the first 100 pips, they were out of the market, because that is our trading plan, me and my team. So guys, this is, you see, as you can see, this is how you take trades. Remember I took both buys and sells. I sold this market and at the same time I bought this market. But again, this was just off knowing how the banks trade. You know, when you know where the banks are going to put in liquidity and drive the market down, you don't need to worry about anything. You just wait for that perfect timing, and then you just put in money. Again, you see, this was a block. This was another block. But again, some of the guys would say this is a demand zone. You see, right here, people would say this is a demand zone right here. They would mark it out like this. You see, they would be like, this is a demand zone. But again, for us, demand zone and supply and demand is just like, it's all the same how the banks trade, guys. So this was my good trade. As you can see, if I zoom out like this, you can even see this was my order block right here on the left side of the screen, and then my entry. We took trade when price came back to this same zone, guys. Guys, let me give you another example of an order block. So this is an order block I drew with my eyes. I didn't really use the indicator. I drew this with my eyes. So this was my order block. As you can see, this order block, you see right here, yeah, this one right here, guys. You see this green one? Let me put this on it. So you see that one, guys. So this is also an institutional order block. So I also took this trade some time back, but I didn't take screenshots of the trades I took. But again, as you can see, this was an institutional order block, meaning you see price came down here. Then when it came back to this same zone, you see, guys, what happened? Price started coming down. You see, price started coming down also off this institutional order block. So this is like where the banks, the big boys have this is where their activity, like this is where you see, okay, now these are banks now doing this. And remember what I told you, the banks always give us these V structures. You see these V structures? This is how the banks trade. They reach there, put in liquidity and drive the market down. So this would be even a supply zone, guys. I can show you another example, guys. So as you can see, this one, you see price here going up, then this green candle, this green candle, this one I'm touching right now. This green candle was the last candle when price was coming up. So meaning this one would be the last. This would be our order block. So meaning, how would we mark the order block? We come here, choose this, then from there like this. You see, this is how we choose the order block if you're using your own eyes. So what I want to do is mark out that candle. So you see the candle I've just marked out, this candle right here, guys. You see this candle right here, that's the candle I've just marked out. That is my order block. So meaning, now look what happened, guys. Price comes down here, you see, price comes back down here, price comes back down here, then again it comes at the same zone, guys. You see, it starts going back down. You see, these order blocks are always respected, because this is where the banks and institutional traders are going to put in their money and trade. And this, when you learn how to trade like the banks, life becomes very easy, guys. So in my more upcoming videos, I'm going to be showing you how we can effectively use these order blocks, or the institutional order blocks, guys. So I'm going to be doing more of these videos showing you how these order blocks indicators work. And guys, When we learn how the strategy works very well, we know how the banks trade in the market. So guys, I want you to stay focused, don't give up, and let's stay focused, man, guys. So the last the bonus I wanted to give you guys, so this is something recently I met with one of I think this is like one of the richest guys here in Kampala, and they've invested in they started investing in cryptocurrencies way back in 2009. So I met with him. He's called, I think most of you guys know him, he's called Sam Festo. So I met with him, we had a chat again. It was, I think, we met at Speaker's Road. Then second day also again we met at Lake Victoria, Serena Chigo. So we talked, he guided me about how we can invest in cryptocurrencies, but mostly it was in the metaverse. So he advised me to make research on the metaverse, make research on the upcoming projects and all that, so that I can invest in more money. Because right now the metaverse is a few people know about the metaverse. They think it's just video games. They think it's a video game, but again, metaverse, it's going to be a space where everything, as you can see, the way the world is, the physical, it's going to be also in the metaverse. So guys, go make research about the metaverse, know what really the metaverse is, and invest in all upcoming projects, because after 5 years from now, the metaverse is going to be the biggest thing. It's going to be the biggest thing. So guys, I want you to take this opportunity. They gave me the knowledge, someone gave me knowledge, and also wanted to share the same knowledge with you guys. So go invest in the metaverse, but again, first make research, then invest in upcoming projects in the metaverse, guys. So guys, if you enjoyed this video about the order block, the institutional order block strategy, guys, make sure to subscribe and like if you're new around here, and don't forget to comment so that we can kill this YouTube algorithm, guys. I'll see you in my next video. See you.